The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6 to 7 years.
Oh.
I mean, just on the radio, didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tiger.
Well, you're already a tiger. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Happy 4th of July, Money Masters and Treasure Hunters. Welcome to Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's away on vacation. Happy 4th of July to all you folks out there. Now, today's show, folks, is going to be very, very special. This is going to be a show that you're going to want to replay over and over again. And as a result of that, what we're doing is this is being archived on Channel 5 in Tiger TV underneath recommended viewing. If you're not familiar with Tiger TV, go to the homepage at tfnn.com. You'll see the Tiger TV button up at the top, and you'll be able to see the archive of this show again. That's on Channel 5 recommended viewing. In fact, the first hour's show is up there as well. So if you didn't catch the first hour's show, it's different than this one. And really, a couple of special shows. These are shows that you're absolutely going to want to watch over and over again. That's why we put it on the archives under recommended viewing. Now, it's Independence Day, and therefore this is going to be a show about financial independence out there. And I call this portion of the show really, or just the opening segment, if you will, the financial independence for teenagers. Of course, maybe the new 50 is really the new 20 out there. And what better place to start than for our children out there? Now, if a teenager, I want you to think about it like this. If a teenager has $1, what should he or she do with it? Now, how you answer that question, folks, is very, very important because it can determine what your teenager, what he or she does with the rest of their life when it comes to money. Maybe you're saying, hey, Steve, it's just $1 and it's just a child. That thought, my friends, is what I call a massive error in judgment. Think of it like this. You see, if your teenager wants to spend the entire $1, what I say you've got to do is you've got to step in there right away, right now, and you've got to say no. And then say, let me show you why you can't spend the whole $1. Put your teenager, maybe have them drive you over, whatever age they are, and drive over to the other side of town. You know, that's a side of town that you don't care to visit, that you don't care to spend any time in. And then all you have to do is look at your son, your daughter, both of them in the eyes and say, is this where you want to live? And you know what their answer is going to be. It's going to be no. And you can say, is this where you want to live? Because this is where people who spend all that they make live, folks. Visualization. Visualization is absolutely one of the most powerful tools out there. I want you to take advantage of it. And, folks, America is absolutely unique a place because it offers you what I consider to be that economic ladder to climb. And here's what's so exciting. The bottom of the ladder, it's absolutely crowded. And the view, it's not really a great view. However, that climb, folks, if you climb with me to the top of the ladder, and you're going to begin doing that today, because I'm going to show you some tools out there that absolutely 70+% of everybody that's listening right now absolutely needs this tool. And if you climb up that ladder with me, I'm telling you what, it's not very crowded, and the view is simply extraordinary. Now, for those of you not familiar with me, I kick things off for TFNN every Monday through Friday, 9 o'clock. It's a show called The Trader's Edge. Now, it's about trading, and it's about investing. What it's mostly about is because you've got the futures trading, it's where is the market going to go. Sometimes you wake up, and you'll see the markets are down 100 points or up 100 points. And when you like to know what does that mean and where the markets are going to go, tune into that show. You can always catch the archive of that show on Channel 9. And then Tom and I also do a show from 10 to 11. We call that the Money Masters Show. And that show is archived on Channel 10 as well. So the markets are open, and we're taking a look at exactly what is going on at that point in time. Now, I'm a technical trader. I used to be a fundamental trader. By trade, by education, I'm a bean counter. I'm a CPA. So kind of an analytical mind, and I used to just simply fundamentally trade. And then it was years ago. I don't know if you've ever had this happen to you, but I just simply had a number of stocks. I used to have 60, 70 positions on at one time. That meant 60 or 70 stocks going at one time. And the weekends were a mess. I spent a lot of time, going back and analyzing each of those positions. But I would have a stock. I don't know if you've had this experience, folks, but I would have a stock and would just simply fall out of bed. What I mean is, I went to bed the night before, and the stock was maybe trading at $50. I wake up the next morning, it's trading at $30 or $25. An absolute, not a haircut. We're talking about a buzz cut, like when I was a kid out there. So I don't know if you've ever had that. When it happens one time, you say, okay, maybe it's an anomaly. When it happens 2, 3, 4, 5 times, then if you're like me, you say, I want to understand why. That's what led me to technical trading. My 2 teachers out there, the 2 guys that are on your screen, Larry Pesavento and Tom O'Brien. Both of those are my mentors when it comes to trading and when it comes to technical analysis. Now, folks, I actually teach them a thing or two here and there. And then it's about psychology, folks. This whole business of trading is really all about psychology. And I like to say that 80% of trading is psychological. And the other 20%, folks, it is all in your head. Now, today, the areas that I want to cover with you, I want to cover with you the moving average formulas on a monthly chart. See, this is what this show is really about here, folks. And I've got a special report that you can access on the homepage of TFNN.com. It's how to manage your retirement funds. So this isn't about trading. It's about how to know when to be in the market and when to be out of the market. You see, the majority of folks out there, the only way that they're able to self-manage their funds is by a checklist that your employer gives you with your 401k, with your retirement funds. And the question is, because it's not your full time, because you're so focused on working hard at what you're doing, as you should. But the key is, if you ignore your money and you don't get your money to work harder for you, when it comes to retirement, you're still going to be working. Now, maybe that's what it is that you want to do, but that should be your option, folks. That shouldn't be because you are forced into doing that. So there is no time like now than to make the change. I'm going to show you the easy tool that's out there. We're going to take a look at the Dow study that I've done. So you're going to be able to download the report. You'll have the report. You'll have the archive of the audio and video that we're going to do here. I'm going to show you a little bit about my newsletter service, Mastering Probability. We're celebrating its 1-year anniversary. It's over the last 12 months. It's produced over 30% return. So if you're getting those type of returns, God bless you. If you're not, maybe you might want to check out the newsletter service because you can try that for 30 days, unconditional money-back guarantee. We're going to take a look at the New York Stock Exchange, the cash signal that it's giving you. We're going to take a look at some of the top mutual funds. These are mutual funds that clients like yourself, listeners like yourself sent in to me, asked me to go ahead and take a view of them, see if they're in a buy mode or a cash mode or maybe even a sell mode for some of you that have the ability to go short in the marketplace. So we're going to take a look at those. We'll take a look at some of the Dow 30 stocks as well. And again, thanks so much for joining me. So let's go ahead and let's begin here. The first thing that I want you to do, though, is I don't want you to forget, folks, 80% of trading is psychological. That's all it is. That other 20%, folks, absolutely in your head. And I want to get in your head because I want to be able to help you make and save money. Now, this is a kind of a cool picture that I picked up. This picture here goes back into 1929 in the stock market crash. And that's really going to lead us to where it is that we're going to start taking a look at this tool here that's going to help you to understand whether to be in or out of the market. You see, most people, if you quizzed them on the street, they would say that the crash of 29 would have been the low of the market. Couldn't be further from the truth. And a lot of folks would say, yeah, it was a crash. You wouldn't have known whether to be out or stay in. Absolutely hogwash. That's all BS, folks. That's all before Steve. That's why you've tuned in here. I'm going to show you that. In fact, if anybody ever shows up and says to you they've got a new fundamental tool that shows you how to trade, I'm going to show you things that have been around forever. It's simple to use, and if somebody shows you or tells you they've got a new tool, run, folks, because all this stuff has been working, because those folks are trying to promise you the Holy Grail. I'm not promising the Holy Grail. I'm going to be able to show you when to stay in and when to stay out of the marketplace. And we're going to use what's called the 50 and 200-day moving average. Now, we're going to use this on a monthly chart. And we're going to use an exponential moving average. Exponential just simply means that we're giving more value to the preceding day, so that day 1 has got more value than day 50. So, and the same thing on the 200-day. Now, if you have a monthly chart, if you've got a chart up on your screen, if you're following along on the home game here, what you want to do is you want to be able to convert the 50-day into a monthly chart. Now, if you were just simply going to trade these, convert these numbers to a weekly moving average, because there's 5 trading days in a week, a 50-day divided by 5 would be what? It would be 10. A 200-day divided by 5 would be 40. Now what we're going to do is just simply, there's 260 possible days in a year, trading days. 9 of those days the market's closed, just like today. If you just simply go take 251 days, folks, and you divide that by 12, that's going to give you a number of 20.96. That says on your monthly exponential moving average, you should use the figure of 2.39. On a 200-day, you should use a figure of 9.56. When we come back, we're going to go start taking a look at the current markets right now, where we're at. This is being recorded on Thursday, June 28th. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. A prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom, and hopefully you're sitting by the barbecue, having some nice wings, some nice chicken, and watching, because you can watch this show on Tiger TV, and you're going to want to watch this show. So if you're listening on the radio, and you're driving around, be safe. You can always go get the archive of this show on Channel 5 underneath recommended viewing. You're going to absolutely want to pay attention to these tools here that I'm going to show you how to use. These are easy tools. You don't have to have any kind of technical knowledge. Now, today, it's June 28th. As I'm recording this, it's about 1:30 in the afternoon on East Coast time. The Dow is trading down 137 points. We're coming to the end of the month of June, so it's really an ideal time to be showing you how to use this tool. We're going to go back and take a look at the Dow going back to 1928 as well. So when we left, I was talking about we're using the 50 and the 200-day exponential moving average. Now, what you want to be able to do is you're converting those 50-day and 200 days into a monthly moving average because you're using a monthly chart. You're going to apply this tool on a monthly chart. So all you're doing is identifying the number of trading days in the year. You can either use 5 days a week times 52 days, and that would be 260. Divide that by 12, and that'll tell you how many trading days you're going to be using on average per month. And then you're just going to simply divide 50 by that. So if you were using 5 days a week, 260 days, that would be an average of 21.66 days per month of trading. So 50 divided by 21.6 would give you a number of 2.3. Now, you can be more exact, and I'm a little bit disciplined to be as exact as possible. That's probably a little bit of my bean counter background out there. And so there's 9 trading days where we don't trade during the year, today being one of them, July 4th out there. So I'm using a slightly smaller factor with regard to the average number of trading days out there. So let's go ahead and get right to it. Let's go ahead. And now, first, folks, what you can also do is I'm going to pop up the homepage of TFNN.com here. I'm going to put that on the screen. And what you can do is you can go get the hard copy of this report. If you go to the homepage of TFNN.com, you'll see over on the left-hand side, you'll see a little arrow up and down. Click on Free Special Report. Go in there. Go fill out the information. There's an email that will be sent to you. Check your junk mail box. Sometimes they go there. That's just simply going to allow you to double opt in so that we can then send you the hard copy report. Then you'll have the hard copy report to follow along with this archive. So now let's go take a look at the charts out there. And I'm going to start with the Dow, since many of you already have that report or you're downloading that report. And we take a look at the Dow. I'm going to go all the way back into the 1920s. So go back with me in time. Now, the lines that you're seeing on my screen here, the blue line and the red line, that is what you're going to use to determine whether or not you should be in or out of the market, or whether or not you should be in or out of the mutual fund. And the study that I have, and I'll pull the numbers up here in just a minute, shows that if we started with $10,000 back in 1929, if you used a buy and hold strategy, folks, today, that would be worth about $500,000. If, on the other hand, you use this very simple tool, which means that when the blue line, which is the version of the 50-day, crosses through to the downside of the red line, which is the 200-day moving average, you would go to cash. You would not be in the market. You would know that you're supposed to be out. You see, here was the crash of 1929. That's this candle. That's where my cursor is at right here. That is October of 1929. Nowhere near the lows. The lows actually came in 1932, folks. You see, in 1929, you had the Dow at the number was about 300. Today, it happens to be 12,000, about 12,500. That was not the low. The low was actually, so you talk about a crash. And now, what you'll also see here is that blue line crossed through the red line. You would have been out of the market. You would have been out at, say, an average of maybe $304. Now, if you had gotten out of the market, that same $10,000, the same 10 grand, if you'd gotten out when you got these signals and gotten back into the market when the blue line crossed back through, as it did right here back in about the 1934 time frame, July of 1934, when it gave you the signal that maybe you want to come back into the market. Actually, I apologize. The first time it gave you that signal was in April 1933. If you just followed this system, folks, that 10 grand today were $6.2 million. Now, if you happen to be one of the folks that is able to actually short a market, meaning that as soon as you get that crossover or the cross through, in this case here, when it moves to the downside, instead of being long the marketplace, you have the ability to be short the marketplace. 10 grand is worth $27 million today. So that's why this tool is so important. So this doesn't mean that you have to learn anything about technical trading. All you have to do is apply a simple tool. Now, if you can't apply the tool and you have decisions to make about your retirement funds, let me tell you, you're underneath my care guide. All my clients are underneath my care, guidance, and protection. So what you can do is you can go to the homepage of TFNN.com. You can click on my name. You can sign up for my newsletter. You can just try it for 30 days. It's an unconditional money-back guarantee. You become one of my clients. You send me the symbols that you've got with regard to your mutual fund holdings, and I'll do the chart for you. I'll let you know whether or not you should be in or out of the market. Even if that means 30 days from now or 29 days from now, you decide to go ahead and drop the newsletter. Just check it out. I want to be able to help you. So as we take a look at this chart here, you see you would have stayed out of the market. Now, if trading or investing is 80% psychological and the other 20% is in your head, how do you think you would feel strength-wise in your mind knowing that you got out of the market in October 1929 and you didn't ride it the rest of the way down, and instead when you got that crossover signal back in 1933 to come back into the marketplace, folks, that how would you have felt psychologically? Would you have felt stronger or weaker? Absolutely. How do you think your neighbors would have felt? How do you think they felt? How did you feel, perhaps, in 2008 when the markets were at highs and you rode it all the way down into March of 2009? Probably didn't feel good, didn't know who to trust, didn't know what to listen to, what to believe. All you have to do is just watch the chart here. Watch how this works on a continuous basis. This gets you in, this gets you out right over here back in the 1934 time frame. You're back in November 1934. You see what this tool allows you to do? This allows you to get the meat of the hamburger. How many of you out there right now on your grill are grilling some nice big dogs or maybe some nice big hamburgers, some juicy steaks? Isn't it really the meat that you want versus the outside edges? Most of you cut off of the fat on the outside edges, and you can just simply focus on that nice prime beef, that nice prime center. Get rid of the bun. Get rid of those carbs, folks. And by getting rid of those carbs here, you're going to be leaner and meaner. What that means is in the case of a stock chart, you're not going to sell at the bottom or buy at the bottom. You're not going to sell exactly at the top, but you're going to get the meat, and you're going to stay in for the long rides up. And you're going to miss these long rides down. Look at this ride down here in 1937. Look at how the market dropped. Look at how this keeps you in the market. You would have been in the market here back in the 1942 time frame. You would have ridden this thing and this is in 1942 was when the stock market, the Dow was at 105. You would have ridden this thing all the way up to 190. You would have got a double on your money. And you would have had peace of mind the entire ride up. And that's what I want you to be able to do. Let's go ahead and bring this thing current, and as you can see here, again, this is a tool that it's no hocus pocus. That's why I go back to the 1920s and bring this forward. Let's go ahead and bring current and see where we're at right now in the Dow. Now, here is let's take our most recent time period where you really could have used this tool. The market was making its highs in October of 2007. You would have been out of the market in January 2008. When the Dow was in the $12,900, $13,000 area, folks. That means you would have not have ridden it down all the way to 6,400 back in March of 2009. And you would have come back into the stock market July 2009. Look at where we're at right now. This is really, really close to a crossover. The blue line is measuring 12,569. The 200-day, the red line, 12,529, folks. You might want to know exactly what you should do with your long-term holdings. Go check out my newsletter service, folks, because I'll help you out. Absolutely. We'll be right back.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he is away. And, we're talking about really success is a numbers game. It's a free report available to you on the homepage at tfnn.com. In the last 2 weeks, we've had over 1,500 people already download this report. This, folks, is, and what I'm sharing with you today, if you're just tuning in right now, catch the archive of this show on Channel 5 on Tiger TV underneath recommended viewing. There's 2 hours that I have taped for July 4th. This is all about financial independence. I don't want you to be a prisoner of your past, folks. I want you to be a pioneer of your future. And even if nobody has taught you how to manage your retirement assets, your funds, I'm giving you a simple way to do that. And I want you to please take advantage of it, because there's nothing that's going to make this country stronger. We take a look at the 4th of July. Nothing is going to make this country stronger than you being financially strong. You, and this is something that you can pass down to your kids, your family, your children, your friends. Please tell others about this. The show is archived. They'll be able to take a look at it. And with success being a numbers game, I'm just going to show you the numbers before we start taking a look at some of the other indexes out there, some of the other ETFs, some of the other mutual funds. You may own some of these mutual funds. These are mutual funds sent in by clients and listeners wanting me to take a look at. Are these in a mode of being in them, or should you be out of them? Now, and it's as simple as that. It's yes or no. It is black or white. And there's not a whole lot of education from a technical trading standpoint that you need in order to be able to make these decisions. Now, again, we started my system here. I started off with my analysis, my study, started off with $10,000 in cash back in 1929. And on the left-hand side, folks, it was all dealing with your only option was either to be in the market or out of the market. That meant when you got the signal to sell, you went to 100% cash, you put it in a bank, you put it underneath your pillow, you put it somewhere in a protected area. Now, some folks out there have the ability to actually go long and short the market. And that's what the right-hand column is about. That says when you get the sell signal, you absolutely go short the market here. So I'm going to page down through it. So that $10,000, and each of the trades is listed here. So again, no hocus pocus. No, it's all just very simple, analytical, bean counter, because I'm a CPA by trade, information. And what this will show you, folks, is that I'll be a son of a gun. It looks like I don't have the entire thing out here for the show. I don't know where the rest of that went to. Well, what I can tell you, here's what the numbers actually show you, folks, and that's this. That the $10,000 that you started off with in 1928, that a buy and hold strategy is worth $500,000 today. The $10,000 that you started off with 1928, that just simply if you exited the market when you got the crossover signal is worth over $6 million today. And if you had the ability to go long and short the market, that $10,000 worth over $27 million today. So it is a simple tool. Now let's go back to the markets. Again, we're recording this show here on Thursday afternoon. You got the markets are down. You got the Dow is off 150 points. The S&P is off 15 points. So it's a great, and we just took a look at the Dow, and the Dow is very, very close to a crossover. Well, let's go take a look at the S&P 500. The Dow is only 30 stocks out there. Well, let's take a look at the signal on the S&P. The S&P right now, the blue line, which is the equivalent of the 50-day moving average, exponential moving average, 1326.57. Again, with a modification, you've got the Stevie modification, which is what you need in order to be able to make your decision to be in or out of the market. The red line, the version of the 200-day, is at 1320, 6 points away from crossing over. Tomorrow's another down day. Then as we end the month of June, it may be giving you the signal to be out of the market. We won't know until the month is over, but very close on the S&P. So if your investments, the boxes that maybe you checked on your 401ks, are tied to the S&P, which covers about 60% of you out there, because that's what you have heard of, that's what you're comfortable with. Maybe you just need to go back and take a look and ask your plan administrator, what have you checked and what are your other options? And get those other options. Go to the homepage at tfnn.com. Try my newsletter service out for 30 days. It's an unconditional money-back guarantee. Send me a list of those options that you have. I'll go through, do the analysis, and tell you it's either in a buy mode, which means you should be in it or long, or it's in a sell mode. You should be out of it. And I'll give you the information, even if that means that 29 days from now you decide to go ahead and cancel your service and get your money back. Take advantage of it. This is Independence Day, folks. And there's no better gift out there other than maybe just a nice, big, juicy steak, or maybe a nice big piece of fish, depending on what it is that you eat out there. So that was on the S&P. Let's go take a look at the Russell 2000. So you got a lot of folks that are inside the small caps Russell 2000. What you can see right now was actually in the month of May. It was very close to giving us that crossover signal. If you're looking in the upper left-hand side, you see the blue line, the number reading is 783.51, and the red line, 782.02. When that blue number gets below the red number, then you need to be exiting the marketplace. So if your investments are based on the Russell 2000, the small cap index, guess what, folks? Although it's only June 28th and we have one more trading day, it's not going to turn back positive tomorrow. You should be out of those investments. You just got the signal because that blue number, 772.96, the red number, 778.90. This is easy. This is you're in or you're out, and you have the signals. Let's go take a look at the NASDAQ. Let's go take a look at the NASDAQ 100. Oftentimes people trade the Qs on it. Let's take a look at what type of signal this is giving us. As you can see, hasn't crossed over. The blue line, the blue number, the 50-day version on a monthly chart of the moving average is at 25.47. The 200-day is at 25.07. So you got a pretty decent wide berth there. So that's saying if your investments are based on the NDX 100, you should still be in the marketplace. Now, let's go take a look at the New York Stock Exchange because, folks, this is the breadth of the marketplace that we're in. And what I want to tell you is right now we are in an absolute bear market. We're just likely starting the next leg down of this bear market. That first leg here, folks, the most recent one that you can certainly remember is the one that took place off of the highs in 2007. The highs were made in October of 2007. New York Stock Exchange gave you the signal to be out in January 2008. And folks, you would have missed that roller coaster down. You would have felt so much stronger. You would have known that your money was parked in the right place, which was on the side, in the dollar, in a bank account. And you would have easily, just by using this tool and having that information, jumped back into the market in the June 2009 time frame, July 2009 time frame, when the New York Stock Exchange gave you that signal. See, the New York Stock Exchange, folks, is like about 2,400, 2,600 stocks out there, that are trading in any one point in time. And so this gives you the real breadth of the market. The S&P, 500 stocks. The Russell 2000, 2,000 stocks. So not a bad, index to be able to use. And we just saw the Russell 2000 said, hey, be out of the market. Well, take a look at the New York Stock Exchange, gave you the signal in May to be gone, long gone. You had 77.20 was the 50-day moving average, 78.16 was the 200-day, and it's getting wider as we speak. So the New York Stock Exchange saying, hey, be out of there. Now, there's a lot of folks that say, I'm going to run for good. No, there's a lot of people that complain about the U.S. dollar and say that the U.S. dollar is absolutely weak out there. Let me tell you, here's the U.S. dollar index, and the U.S. dollar index, folks, is a basket of currencies. The euro is about 50 some odd percent, 53% or so of the weighting structure. You got the yen, you have the pound, the Canadian dollar, the Swedish krona, the Swiss franc, and that's what makes up that basket of currencies. Well, let me tell you, King dollar, the U.S. dollar, has gotten stronger and gave you an actual signal to be long, to be going long back in September 2011. What our markets do not like is a strong dollar. Everything is measured in dollars. Gold measured in dollars. Oil measured in dollars. Why do you think oil is getting a little cheaper? Why do you think it's a little bit cheaper at your pump? It's because the U.S. dollar, your dollar, is actually getting stronger. This is about go long America. And that's a beautiful thing as we celebrate July 4th out there. Now, if we take a look at the, we've covered here all of the indexes. Let's go switch over and take a look at, because there's a lot of folks that say, at this time I'm going to go ahead and I'm going to run for cover in some of the big large cap names, some of the large stocks out there, maybe like Caterpillar. A lot of folks think that Caterpillar is the second heaviest weighting inside the Dow. The Dow 30 is not equally weighted. IBM is the number one weighting out there. Number two weighting is Caterpillar. So some folks might say, hey, it's the number two weighting. You might know that, and Caterpillar would be a good place to park my assets. Folks, that is not a good place to park your assets, because what Caterpillar did, Caterpillar gave you the signal. We're taking a long-term monthly chart, and this told you in May to be long gone. You see, the 50-day version of on the monthly chart, the number came in at 94.38, 98.77 on the 200-day. The blue line crossed through. This tells you Caterpillar right now is in a long-term bear market. That's the number 2 weighting inside the S&P 500. What if you happen to be a person that believed in Bank of America and you thought that Bank of America was a good stock? Well, let's take a look at the Bank of America. Bank of America right now, back in the month of April 2012, gave you the reading that it was time to be long gone. Now, that stock's trading at $7.59. Of course, you know that Bank of America here, folks, back in the 2006 time frame, trading at $55. Now it's at $7.59. And, folks, talk about giving you a signal. The signal to get out of Bank of America came September 2007 when it was at $50. That means you didn't have to ride it all the way down in 2009 when it got down to $3. This tool, folks, this is a show you're going to want to watch over and over again. Go to the homepage, tfnn.com. Order that free report. Do it now, folks. We'll be right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each week issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I'm very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Tom O'Brien Show, folks. This is our July 4th edition. Happy July 4th to you, and thanks so much for being here. Now, before we went to break, folks, we're taking a look at the concept here and utilizing this tool, and it's all about being able to certainly protect your assets. As I'm recording this show here on Thursday afternoon, almost 2 p.m. Eastern Standard Time, the Dow is up 154 points. And, operating out of fear will absolutely get you nothing. You do not want to operate out of fear, and I'm giving you a tool here that becomes very easy. Allows you to be very objective. You just simply, if you have this crossover, you're simply out, and you don't have to be listening to all the noise that's out there in the marketplace. Life is really all about being able to turn your mirrors into windows. What I mean by that, folks, is go look in the mirror. You're going to see yourself. You're going to see fear. You're not sure what to do. If you turn that into a window and you jump right through it, you go ahead and take action. You take massive action, folks. It is amazing what it is that you can accomplish in life. And I know the power that each of you have with inside yourself. There's a lot of folks out there, you take a look at, you hear all the ads on the news. Tom and I are partners in the gold and silver business. Would love to sell you gold or silver if that's what you'd like to buy. A lot of folks are running to, a hard currency. They're worried about the dollar. Well, we already talked about and showed you how on a chart pattern, the dollar, the U.S. dollar is getting stronger, not weaker. Don't believe what it is that you hear out there. Believe the chart pattern. Just the opposite. A lot of folks will tell you need to start parking your money in gold or silver. Now, it's okay to diversify, but I will tell you that gold gave you the long-term sell signal. It did this here, folks, using the same tool back in May. It had, when gold traded out, when it closed out at 16 on the moving average side, you had the blue line, the 50-day line at 1604, the red line, the 200 at 1636. It gave you the long-term signal. This doesn't say start putting all your money in gold right now because the world's going to fall apart. In fact, in the case of gold, it gave you the signal to get in back in December 2008 when it was around $800 and some odd an ounce. There are times when you should not be in gold. Maybe this is just a short-term period of time, but utilize this tool, folks, when you should be in, when you should be out. Maybe you say, hey, I'm going to use the poor man's gold. I'm just simply going to go ahead and park my money in silver, in high-ho silver. Well, let's just take a look at silver. This would have given you the signal to come back into silver back in the April 2009 time frame, which would have been beautiful. You would have gotten into, back then, folks, you had silver at the 11, 12 buck area. You would have been out of silver up here at $34 back in September of 2011. Silver's been in a long-term bearish mode since September 2011. That was at the $34 mark. Right now it's trading at $26.12 as we speak, folks. So you can use this tool for just darn near everything, whether it's an actual ETF, whether it is a mutual fund that you have a choice for in your 401ks. Today is about financial independence, and I am showing you a tool that will empower you so that you can decide when to be in the market and when to be out of the market. And get that free report so you can rewatch this show here on Channel 5 on Tiger TV under recommended viewing. Also, if you didn't catch my first hour, it's a whole set of other information that you absolutely need to know. There's 2 hours here on Independence Day that you're going to want to review over and over again. Let's go take a look at some of the mutual funds out there that some of you sent in for me to take a look at. If we take a look at them, you've got, how about Western Asset Core Bond Fund? The ticker symbol on that is WATFX. So if we take a look at that, I'm going to pull that up here, and this told you that you should have gotten back into this in May of 2009. You can see the blue line is still above the red line. So for those of you that happen to be in the Western Asset Core Bond, this is a bond fund, you still need to stay in this thing. No reason to get out of it. Again, we're not trying to sell at the high or buy at the low. All we want is those nice, big, juicy steaks, whatever kind of steak. Maybe it's a filet, maybe it's a New York strip. How about if we take a look at the Delaware Pooled Focus Small Mid-Cap Fund? The ticker symbol on that is DCGTX. So if we take a look at that, folks, here, and we've got some listeners that are in on this. If we take a look at where this is at right now, what you can see is this is very, very close to crossing. This may cross by the end of business tomorrow. The reading on the 50-day is at 15.54. The red is at 15.51. You still stay in it right now, but as this month comes to an end tomorrow, June 29th, obviously June 30th, the end, if this gives you the signal to be out, then you're out. It's as simple as that. You're either in or out. And you can look at this. This gave you the signal to be in back in May of 2009, gave you the signal to be out back in September 2011, had you get back in the following month in October. But this is the way that you want to be able to manage your money. Some of these funds, they use all these very interesting names out there. How about the, let's just take a look at the Berkshire FDS Focus Fund. Let's see what that is doing here. Just picking these off one at a time. The ticker symbol on that, BFOCX. So let's take a look at BFOCX. That is telling you right now you should be in this. You've got a pretty wide gap here. The 50-day version of the monthly reading is 14.16. The red, the 200-day reading at, let me see here. It is at 13.72. So you should be in that fund. Let's go take a look at a couple. Let's go take a look at this one right here. The ticker symbol on this, and we'll find out the name. It is, the ticker symbol is PRPFX. PRPFX. This is the Permanent Portfolio Fund. I guess they want you to permanently trust your money to them as if it's always going to go up. Well, we know that that is not the case, folks. And in fact, in the month of April, it's really the month of May. The month of May said, be long gone. Gave you the reading on the blue line of 47.15, the red of 47.79, said that you should be out of that. So if that is your choice of your mutual funds, if it's called Permanent Portfolio Fund, folks, then you need to you need to temporarily be out of this, because you're going to wait for that 50-day to cross back up and over the 200-day, and then you put your money back to work there. You get in touch with your fund manager, and that's what you would do. Let's go take a look at just another one out here real quickly. Let's see what jumps off of the screen here. One that you might be in, ADTRX. ADTRX, that is the... let's see here. That is the AIM Trimark Small Companies Fund. This one here, folks, giving you the signal to be gone in the month of May as well. And so if you are holding this, you should be out of this fund. If we take a look at, let's take a look at this one right here, the FLGEX. In fact, you can go to Investors Business Daily. You can go to so many places to take a look at. Maybe you have quite a few options as far as what to be in or what to be out. You can see how this tool here on this fund, this is the FLGEX. This is the Fidelity Large Cap Growth Enhancement Fund. Isn't it nice how they use all those words to describe it, folks? Right now, this says it's okay to be in, but it's getting very, very close to crossing. Folks, I want you to have just simply a fantastic 4th of July. And what I mostly want you to know, folks, is you've got an amazing power within yourself. That power is so strong, it'll bring about miraculous outcomes, produce a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent magnificent masterpieces. They'll allow you to become incredible money masters, folks. Tune in to me tomorrow morning, 9 o'clock. Go get this free report. Test out the newsletter. Have a great 4th, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.